I wouldn't call it a rebound per se, but we're definitely seeing some improvement in the market. The interest rates are low right now, lower than they've been in a while, and I do see another drop coming up in the near future. With anything real estate cyclical, we've been in a very strong market for a long time, so we are at the tail end of this thing. And I think dropping the interest rates is trying to slow down the effect that would happen to the market if the inventory kept increasing and the prices started decreasing. So I think they're trying to minimize damage right now. But that being said, I would say I'm selling more properties faster right now than I have in a long time.
You're selling more properties. You sound so cautious, Tarek, but the day-to-day sounds like it's doing pretty good.
I mean, it is doing pretty good, but I am very cautious. You know, I'm heavily into house flipping here in California. I buy a lot of buy and hold rental properties out of state. So I'm studying I'm studying real estate all day, every day. So I'm very in tune with the market.
The rental market was very hot after the financial crisis, and guys like you could really take advantage of that. Hasn't that cooled off quite a bit in the last few years?
You know, I'm just looking at different locations. You know, when I was here last time, I had told you guys I bought a bunch of rental properties. Right now, I'm close to 90 houses. I bought more since I was here last, and I just bought 11 in Oklahoma. I bought 18 in Atlanta, and I think I bought 14 or 15 in North Carolina. So different markets around the U.S. have different, housing opportunities, and it's just finding the right places.
Okay, so here's my question, because I flipped a house about a year and a half ago. From my
She's very
perspective,
handy.
I am handy.
She is handy.
If you ever need a guest host, I'm willing to pick up a hammer and join you. Here's the thing, though. You have to buy the house really low because then those improvement costs kick in. And right now you're paying more for lumber, for insulation, for these materials and transportation costs. So that aren't you seeing generally the profit margins shrinking?
Those are very good points. So when I started flipping houses to today, I'm not kidding, I'm probably spending twice as much money on the total construction than when I first started in the business. And the truth is, yes, the construction costs have gone up a lot. Material costs have gone up a lot. Labor, because of how hot the market's been, has gone up a lot. So all the costs have increased. At the same time, the profit margins are still there, but they're just less. So as an investor, I still run my numbers, and at the end of the day, it's simple math. How much am I going to spend? How much am I going to sell it for? And how much am I going to make? But with the increase in cost to develop and build and things like that, it is affecting profits.
And, I mean, how closely are you watching the trade wrangling going on right now with the expectation that some of those materials that you're talking about are going to go up even higher in price?
Yeah, I mean, some materials have gone up a few $100% already. So it's definitely affecting the cost to build. It's going to affect new construction. It's going to affect remodeling. It's going to affect the economy in many, many different ways. That being said, just because as a developer or as a house flipper or as an investor, I'm spending more money to fix up houses, it doesn't mean I can charge more for those houses. So at the end of the day, I don't see the consumer getting hurt by it. If anything, I see the builder, the developer that's going to be taking that hit.